In today's video, I'm going to be breaking down 5 energy stocks in general. It's going to be oil stocks because oil's been getting a lot of news recently. Their stocks have actually been doing pretty well versus the stock market because oil prices are up. So let's get down, let's really check these out and see which is the best solution right now. Will oil go up? Will oil go down? Let's really talk about this. But first, let's check out these stocks. Suncor SU is actually quite interesting. The PE ratio is 6.9. Its average volume is around 11 million shares per day, and over the last, it's got a 4.1% yield. So of course for us dividend investors, this looks very interesting. Its earnings have been doing pretty good as well. They've only had one missed quarter. They've had 2 beaten quarters. They're looking pretty good. Their revenue is in line with what they did previously before the virus. However, their earnings are much higher now, most likely because they laid off staff, which means that they're probably making more money because of that. If we look at their stock chart, we can see that recently, while the stock market's been pretty much plummeting, their stock has been pretty much trading within a range. Its 5-year chart, however, if we look back to the virus, plummeted because, of course, oil went for the first time ever into the negatives, and since then, oil's been on a tear. In fact, it was pretty much going to the moon until really recently, since the middle of the summer. However, this drop is nowhere near how far some of the other stocks have dropped on the stock market, especially dividend stocks. If we look at their dividend, we can see that they've raised their dividend. They've pretty much well over doubled it since the virus was going on. Of course, when the virus hit, they lowered the dividend because for obvious reasons, nobody was making money on oil. Next is the Canadian Natural Resources Limited, CNQ. Now, this one is actually up on the past trading day. Its PE ratio is a bit higher than Suncor's at 7.7, and they get less trading volume, but it did have higher trading volume than it did on average over the last trading day. Its dividend is pretty well similar to Suncor's at 4.05%. And if we look at their earnings, they've had 4 beaten quarters out of 4, and they're making more revenue and more earnings over the past year than they ever have before, really. And if we look at the previous years before the virus, they are far superior numbers earnings-wise than they ever were before. If we look at their 5-year chart, it exploded while fuel and oil prices were going up. It's recently moved down, and like many other oil stocks, it's hit a double bottom, which is kind of scary if you really think about it, because that just usually means every time there's a double bottom that it's gonna go up. How far higher will it go? Well, we're gonna have to look at oil prices, but also oil prices have had a very similar chart. Their dividend is increasing, which is nice. They didn't exactly lower it back when the virus was going on. Actually, they didn't really lower it at all, which is fantastic. And overall, Canadian Natural Resources seems like probably the better company out of most others to actually go with, especially if we get somebody like Pierre Poilievre to be able to become Prime Minister, which he probably will be. These Canadian oil stocks could see a massive surge. Very similar to how wheat stocks had a surge when Trudeau came in, oil stocks and mining stocks in general, if Pierre comes in, could have a massive boom. I played the wheat stock craze because I didn't like Trudeau going in, but I like the idea of this stuff getting legalized, which I also like to pay attention to, and of course see what options there are when certain people get elected into office as to what will do well. For example, oil stocks would do really bad if Biden got another term. However, if a Republican got in the US, that would be really good as well for oil stocks because that would mean that there would be more mining. Now, the downfall and why that surge at first would be then muted is because, of course, there would be more oil flooding the market and it would draw oil prices down, which then gets me into the next stock, which is Enbridge. Enbridge is a win-win. Whether you have high oil prices or not, there's going to be mining involved and they're going to need to transport oil. But Enbridge is not just an oil stock. They are an energy stock. They're not just oil. Yes, they have oil pipelines, LNG pipelines, and things like that. But they're an energy stock. They have a lot of green energy and a lot of solar panel farms that they're putting together and that they own right now, and wind farms that they own right now. And if we really think of it 20, 30 years down the road, there's still going to be this big push into green technology, which means more electricity is needed. And guess who does that? Enbridge. So, while Enbridge is a good stock today with a high dividend, it looks kind of interesting for the future as well because of all the people who think that electric cars are the future. And volume is huge at 4.5 million shares traded in the last trading day and 3.2 million on average. Their PE ratio is going to be higher than an oil company because they transport oil, but their dividend is massive at 7.04%. This is a stock where if you are a dividend investor, you need this in your portfolio. Their finances are kind of interesting. They had one met quarter, one beaten quarter, and 2 missed quarters. And if we look at their revenue and their earnings, the biggest takeaway is that they're not losing money. They're making money. However, could they make more? Yes. But their earnings are better than 2018, which is the year before the virus. So that's good, right? Their 5-year chart is quite interesting. They hit that double bottom like many other stocks did back in that time, and they went on a tear since. Now, something to really pay attention to is, of course, this line right here. It's broken below that line and currently is setting up like that, where essentially, if this price continues to drop, there's really not a safety net until it gets down to about that price there, which is somewhere in that $25-ish, $28 range. And if they bounce off this level, then they could potentially return back up into the 40 range. But you're buying it for the dividend and the long-term prospect of owning it for probably 10 plus years. And if you are, then definitely the dividend is something that you would be wanting to look at. They pay it quarterly, and it's a massive dividend. Next is Cenovus. Cenovus, again, is a great company. This one's on the American stock market, and its average trading volume is 8.8 million shares, and last trading session was a little over 12 million shares. 12 PE ratio, which is a bit higher than the Canadian oil companies, but a much lower dividend at 1.6%. What you're buying here is their 2021 earnings. They are revenue. They're absolutely crazy. They have had 2 missed quarters, but 2 beaten quarters as well. But what you are buying is the massive revenue. Now, Canadian National Railway is not an oil stock. However, it's a transport stock, and when oil was being mined like crazy out of Alberta and the oil sands out there, this stock went crazy because there was not enough train cars to be able to transport, number 1, oil, but number 2, grain. Those are the 2 things that this company makes a ton of money on: oil transportation and grain transportation. The reason why they make a ton of money on oil transportation is because we have too many green crazy people here in Canada who somehow don't like oil pipelines. And while it may seem like a better idea to not build oil pipelines and say that they're bad for the environment because you could just put it over train, there were actually more issues and accidents and oil spills and oil leaks when it came to oil being transported by train than it did by actual pipelines, which just makes me so very confused with the green people. But when it comes to the trains, pipelines, we still haven't built pipelines out. Trudeau's made it extremely hard to be able to build anything when it comes to oil or natural gas or really anything, where if you're looking at maybe a Pierre Poilievre making prime minister, he's going to be opening up all of those mining sites again, but we still don't have the pipelines, which means that Canadian National Railway is going to be making a killing once again. So, let's take a look at the stock. It's got a 1.9% dividend. Its average volume is 900,000 shares. and its PE ratio is more in line with Enbridge at 20. Over the past 5 years, guess what? Their stock has gone up, and it really has been trading within a range ever since, of course, the virus issue. I have to choose my words correctly. Ever since this whole virus stuff has been completed and finished and not happening anymore, that, it's just kind of traded sideways while the market has been pretty much plummeting. Its dividend has been very, very healthy and, of course, been increasing over this time. Keep in mind that Canadian banks were not allowed to raise their dividend while these companies like Canadian National Railway could. And when it comes to their quarterly earnings, they've had 1 miss and 3 beats. So there's my thoughts on, of course, oil stocks. When it comes to oil price, if the Republicans take more seats down in the States, if Pierre Poilievre wins an election, or if the Republicans get back into the United States president seat, then of course oil prices and oil stocks will go up at first. Not oil price, but oil stocks will probably have a couple of weeks, maybe a week or two, where they do extremely well because companies are going to say, hey, we can start mining again, blah, blah, blah. But oil prices will sink, which then means that these stocks will also sink with it. So you have to really time the trade right. As of right now, it doesn't look like there's going to be an election in Canada until probably next year, and if not, another 4 years. So we'll just have to see. Anyways, I hope that you've enjoyed today's video. If you have, hit that like button and subscribe, and I'll see you guys again next time.